There's a crypto network sitting near the top of the market that just got wrapped in a structure most people in this space have never had access to before. This goes beyond a normal crypto fund or a ticker that only tracks price. It's a US listed product built around SUI that seeks to give investors exposure to the token and to staking rewards inside the same kind of brokerage account they already use for stocks and funds. That matters because for years, crypto investing has had a wall around it. If you wanted to own certain assets directly, you had to open an exchange account, move money in, learn wallets, protect a seed phrase, and then figure out staking on your own. And a lot of people were never going to do that. Now, Canary Capital has launched a Nasdaq traded product tied to SUI, ticker SUIS, and that changes how regular investors can look at this network. Give me the next few minutes because this is worth understanding before the broader market fully catches on. I also want to be clear about something. This video is sponsored by Canary Capital and is disseminated on behalf of the Canary SUI ETF. The coin I'm talking about is SUI, and I've done a lot of deep dives on SUI on this channel already. So they wanted a real breakdown from someone who actually follows the network, not a scripted commercial. And that's what you're getting here. And to understand why this product matters, you have to first understand why SUI has become one of the more important networks in crypto. So SUI was built by Miston Labs, a team that came straight out of Meta, where they worked on the digital currency project Meta tried to launch before regulators shut it down. That team took what they learned inside of one of the biggest technology companies on earth and built a new network from scratch. What makes SUI different is speed and design. Most blockchains process transactions like a single checkout lane at a grocery store. SUI was designed to process many transactions at the same time, more like opening 20 checkout lanes all at once. That's the simple version of parallel execution, and it's one of the reasons developers keep building on the network. The numbers are real. SUI processed more than $111 billion in stablecoin transfers in January 2026, according to SUI Foundation data. Decentralized exchange volume on the network crossed more than $43 billion from January 1st to late February 2026. Total value locked in SUI DeFi peaked at about $2.6 billion. The network has reopened more than 200 million accounts and more than 1,000 monthly active developers. Those aren't small numbers for a network that only launched in 2023, and it goes beyond trading. Major names in payments, stablecoins, custody, analytics, gaming, and real-world asset tokenization have been building around the SUI ecosystem. Circle has native USDC on SUI. Ethena products have been announced for the network. BlackRock's BUIDL fund has been referenced in connection with one of the SUI stablecoin products. Fireblocks has integrated custody support. CCP Games, the studio behind EVE Online, has been moving its next blockchain game towards SUI. And there are also projects looking at tokenized real-world assets and supply chain use cases. So when I talk about SUI, I'm not just talking about a chart, I'm talking about a network with actual usage, actual developers, and actual infrastructure being built all around it. And in my opinion, that's why SUI keeps coming back into the conversation. Now, before I go further, I'm not a financial advisor, and this video is for informational purposes only. Crypto and crypto-linked products are risky. Prices can move fast, and investors can lose money, including principal. Always read the prospectus and do your own research before making any investment decisions. And with that said, here's what changed. Up until now, if you wanted exposure to SUI, you generally had to use a crypto exchange and own the token directly. If you wanted staking exposure, you had to figure out validators, wallets, custody, unstaking, and the risks that come with that. The Canary Stake SUI ETF, ticker SUIS, gives investors a different access point. It trades on Nasdaq. You can buy and sell it through a brokerage account that supports Nasdaq traded securities. The fund seeks to provide exposure to the price of SUI, and it also seeks to stake SUI through the network's proof of stake system. So staking rewards can be reflected in the fund's net asset value. That last part is very important, but I want to say it clearly. This is not interest, it's not guaranteed income, it is not a dividend hitting your account. Staking rewards are variable, they can change, and they are reflected in the fund's NAV. If the price of SUI drops, the value of the fund can still drop, even if staking rewards are being earned. But the structure is still interesting. Bitcoin doesn't have staking. Traditional spot Bitcoin funds only give you price exposure. With SUIS, Canary is trying to package SUI price exposure and staking reward exposure inside a listed fund structure. That's different from just simply buying a crypto asset on an exchange and trying to manage everything yourself. For investors who want exposure through a familiar brokerage account, that matters. You don't need a crypto wallet, you don't need to manage a seed phrase, you don't need to pick validators yourself. The fund handles custody and staking through its service providers, while investors own shares of the fund. That distinction matters too. Buying SUIs or SUIS is not the same thing as owning SUI directly. You own shares of the fund, you do not have direct token holder rights. Shares can trade at a premium or discount to NAV, and brokerage commissions and fees can reduce returns. That is why the prospectus matters. If you've been following my SUI breakdowns, then you already know I've been watching this network very closely. I'm tracking the big moves, the integrations, the developer activity, and the products being built around it. If you want to keep following the research I'm doing, then make sure you subscribe to the channel. Now, you might be wondering how the staking part actually works in the fund. So the simple version is this. The fund holds SUI. A portion of those holdings may be staked through SUI's proof of stake network, and if rewards are earned, those rewards are added at the fund level and reflected in NAV. You don't claim tokens yourself, you don't manage the staking process. The fund does that behind the scenes. Canary Capital says the fund seeks to stake substantially all of its SUI holdings, but some SUI may remain unstaked from time to time for redemptions, expenses, or other fund needs. And that's normal fund mechanics. The key point is that the product gives investors access to SUI exposure and staking economics through a Nasdaq traded wrapper. The provider stack is also worth paying attention to. Digital asset custody is handled by BitGo. Cash custody and fund administration are handled through US Bank National Association and US Bancorp Fund Services, LLC. The fund also works with recognized trading counterparties and market makers. Those details aren't flashy, but they matter because they're part of what makes the product usable in the public market. So if this is something that you want to look at for yourself, the ticker is SUIS. It trades on Nasdaq, and availability depends on your brokerage platform and account type. Some retirement accounts may be able to access it where permitted, but you should check with your platform and advisor before assuming anything. But let's bring it all together. SUI is a major crypto network built by a strong technical team with stablecoin volume, DeFi activity, developer activity, and institutional infrastructure forming around it. Canary Capital has now launched SUIS, a Nasdaq-traded product that seeks to provide SUI exposure and staking rewards reflected in NAV without requiring investors to manage a crypto exchange account, wallet, or validator setup. In my opinion, the most useful thing here is the access itself. It doesn't make crypto risk-free or simple, but it gives investors another way to evaluate exposure to a network that's already seeing real activity. That doesn't remove the risk. SUI can be volatile, the fund can decline, staking rewards are not guaranteed. But for people who have wanted a more familiar access point, SUIS is worth putting on the research list. The links are in the description if you want to learn more, read the prospectus, understand the risks, and talk to a financial advisor if you're not sure whether this type of exposure fits your situation. And here's the quick disclaimer again. This video is sponsored by Canary Capital. I'm not a financial advisor, and this video is for educational purposes only. Investing in SUIs involves risk, including possible loss of principal. An investment in SUIs is not a direct investment in SUI. Staking rewards are variable and not guaranteed. Read the full prospectus before investing. I'm going to keep covering SUI and the products being built around it as this market develops. So if you want to stay ahead of the research, make sure you subscribe and turn on notifications. I hope you enjoyed this video, and I'll see you in the next one.